నమస్కారం. డాక్టర్ బిఆర్ అంబేద్కర్ సార్వత్రిక విశ్వవిద్యాలయం విద్యార్థులకు స్వాగతం. ఈ ప్రసారంలో
Individuals and institutions make investment in anticipation of return, which of course is associated with some amount of risk and uncertainty. And people tend to invest in securitized financial assets, non-securitized financial assets, mutual funds, real assets, derivative products, and so on and so forth. Now, in the context of the volatile markets as we witness today, there is a possibility of people suffering losses, financial especially, and because of this people go for safer avenues, and one of them is mutual funds. Now, mutual funds offer definitely fair amount of return. It is not totally risk free because it is subject to market risk, and what really happens is when it is subject to some kind of volatility, there is a possibility that there are gyrations in the market return, and people definitely go after safer havens and avenues. One of them again is mutual funds. Now, mutual funds have really assumed a lot of importance in the context of the recent happenings in the stock market. Now, in this particular context, we thought we'll take up an important issue called financial institutions and market. As part of that, we would be discussing about the mutual funds, the concept, the types, the problems involved, and the considerations to be kept in mind while selecting a particular mutual fund for investment, and the recent happenings in the stock market. And this is going to be useful for students who are pursuing PG Diploma in Business Finance, MCom, MBA, and BCom with Dr. B.R. Ambedkar Open University. To discuss the various aspects of financial markets and institutions, particularly the mutual funds, I have a resource person who is a specialist in mutual funds, Dr.k Kumar. He is an associate professor at the Shivshwan Institute of Management, Kompally, Secunderabad. And now, may I request you, Dr. Kumar, yes. What do you think is the whole concept of mutual funds? What is it about? Can you enlighten us?
Yeah. Instead of investing in the markets directly, an investor can invest in the market in an indirect way. It's one way, it's an ubiquitous pool of funds, and investors can invest in these securities through mutual funds. Mutual fund is an investment avenue where an asset management company will collect the funds from the investors, and on behalf of these investors, company will invest in various securities, namely shares, debentures. It may be of capital market instruments, or it may be of money market instruments consisting of debt securities, corporate paper, or NCDs, non-convertible debentures. So, as fund management company is investing on behalf of the investors, the amount of income that was generated or capital appreciation will be transferred to the investors in proportion of their investments. For the purpose of calculating the proportion of investments of each investor, the funds will disclose net asset values on a daily basis, or on a weekly basis, or monthly basis. But as per the SEBI regulations, every mutual fund company is supposed to present their NAVs on a daily basis in the newspapers.
What is an asset management company? And you also used another important concept called net asset value. What is it? How is it calculated?
In the Indian mutual fund industry, mutual funds are closely monitored by Securities and Exchange Board of India, is the apex capital market regulator. The entire mutual fund industry was operating in the Indian scenario with 3 layers, consisting of a sponsorer, a trust, as well as an asset management company and a custodian. Suppose if it is an LIC sponsoring the mutual fund, LIC mutual fund. If it is SBI sponsoring the mutual fund, SBI mutual fund. But as per the SEBI regulations, sponsor must invest 40% stake in this asset sponsored company. Then the sponsor will create board of trustees as per the trust regulations, Indian Trust Act. Then with the help of trust, he will create an asset management company. With the help of board of trustees and asset management company, a custodian also will be presented in the structure. Custodian is a fellow who is taking care of the custody of assets and shares of the mutual fund company. So, in the 3-tier structure in the Indian scenario, we are operating the entire fund management activities will be in the hands of asset management company solely responsible for the purpose of floating these various types of schemes, namely from plain vanilla options to complex schemes that are presented in the market in today's volatile scenarios for the investors.
Can you further elaborate on plain vanilla concept?
Especially in the categorization of mutual funds in the Indian scenario, we have 3 basic categorizations of mutual funds are presented. One is about the structural basis of classification, like we have open-ended schemes as well as we have closed-ended schemes. Coming to the topic of investment objectives of the investors, we have classification like income-based schemes, we have growth-oriented schemes, we have balanced schemes. Other than structural based schemes or other than investment objective based schemes, we have other schemes are also presented in the market. Like take an example, we have index based funds or mutual funds are there. We have mutual funds in the category of gilt funds, money market mutual funds are also available in the market.
Yeah, I think Kumar, that gives me a good clue to move on to discuss something about the types of mutual funds you have. And as I understand, like mutual fund is a collective vehicle which enables you to channelize all your savings, not directly into the market, but indirectly into the market through an agent. To a very professional
fund management company will manage the funds.
For which manages your funds. Instead of you directly entering into the market, you enter the same market through different things. They are professionally managed, services are offered. Fine. Now, can you tell me something about the typology? People often keep hearing something like open-ended schemes, closed-ended scheme, and what are this?
Well, at the time of establishing mutual funds in the Indian scenario, we adopted the concept of this typology from UK, where we have a concept called as closed-ended mutual funds and open-ended mutual funds. Whereas in US, we have a consideration called as load funds and no load funds. But coming to the Indian scenario, we have funds like open-ended schemes and closed-ended schemes. As the name itself is indicating, open-ended schemes are available for the investors, and at any point of time they can enter and they can exit. That's why the majority portion of the open-ended schemes are managed with liquid securities, means they can easily convertible into cash and they can repay. If it is possible in case of open-ended schemes, the fund managers can go and borrow also. But in case of closed-ended mutual fund schemes, as the name itself is indicating, there is a fixed time period will be offered to the investors. They can enter into the scheme within that period, offer period only.
Do we have any fund on now? Any present fund which is open now for subscription?
Subscription point of view, we have schemes are presented in the market in the form of.
No, right now at this moment of time.
Right now, based on the current market scenario, funds are suggested by the fund managers and the industry experts are indicating about equity oriented schemes where we can enter through different routes. Suppose take an example in the volatile market conditions, they are suggesting to enter into these schemes like DSP BlackRock Equity or Franklin Templeton Blue Chip Fund, or take an example of HDFC Top 200 or HDFC Small and Mid Cap Mutual Funds. Through these mutual funds, we can enter through the route of SIP, Systematic Investment Plans, to facilitate the investors instead of investing lump sum amount at a time.
No, why do you call it a systematic investment plan?
That's what I am sharing. Instead of investing lump sum amounts in the scheme, as a small investors, they can also be familiar with the mutual funds.
They'll be split into smaller parts, smaller units.
It's not exactly the smaller parts. Instead of investing minimum 5,000, once upon a time we have a system called as minimum 5,000 rupees I have to float into the scheme. But instead of investing 5,000 at a time, on a monthly basis, I can route my income to these funds. Like take an example, on a monthly basis, 500 rupees I can give an SIP. I can give an SIP instruction to my banker. So on a continuous basis, every month on the indicated date, my amount will be deducted from my bank account, so that it facilitates the small investors also to enter into this mutual funds case scenarios. After 2005 nearly, Securities and Exchange Board of India started adopting this type of activities, like SEBI introduced about systematic investment plans, systematic withdrawal plans also they indicated, systematic transfer plans also. In the today's market condition, these are the 3 basic issues that are playing a vital role. As an investor, I can enter into these schemes. Suppose take an example, today the market was around maybe between 19,800 points were presented. Still there is crash we are expecting in the market. But instead of entering into the market closely, as an investor, I can enter into the market through SIPs, systematic investment plans. Means I can enter into these mutual fund schemes, whatever I named earlier, like DSP BlackRock or UTI MNC mutual fund or HDFC Top 200 or ICICI Prudential Diversified Equity Mutual Funds. In all these schemes, on a monthly basis, I can enter. The advantage of SIP than compared with the lump sum, the advantage is always rest in types of averaging principle. Means on behalf of the investor, fund management will purchase the units at different time intervals. So at one point of time, I will get an average price for my scheme, whatever the scheme I am supporting about it.
Mutual funds currently floating different kinds of schemes.
Yes.
Suiting the investment preferences of the investors. Now, what do you think is the structure of mutual fund industry, and what do you think is the role of SEBI in regulating the mutual fund industry in India?
Yeah.
There are three things. One, the structure, the role of SEBI,
yeah,
and then
exactly.
Would you please throw some more light on this?
The current structure that was operating in the market was closely monitored by the SEBI with different members. Suppose take an example as we discussed earlier also. SEBI adopted a three-tier structure, or I can say a three-layer structure in the market, which consisting of initially a sponsor will sponsor the company. When sponsor sponsors the company, as per the SEBI rules and regulations 1996, he is supposed to invest minimum 40% stake in the sponsored company. When sponsor is investing 40% stake in that company, sponsor responsibility is to create board of trustees. How board of trustees are created by the sponsor means, under Indian Trust Act, sponsor has the sole responsibility to create the trust. Normally, trust meant for the benefit of investors or trust, whoever the trust members, like here the unit holders. When trust is created for the benefit of unit holders, trustees will closely manage all these activities. In addition to the board of trustees, to float the schemes, an asset management company is also created. AMC is the sole responsibility to float various types of schemes. But we have to make a close observation about the AMCs. Different AMCs, nearly we have public mutual funds are there, private mutual funds are there, we have joint ventures are there. In the recent past, even foreign mutual fund companies like Mirae Asset Management Companies also entered into the market. So when wide varieties of asset management companies are presented, every AMC had their own concentration, rather I can say their own USP in the market. Suppose take an example, if it is HDFC mutual fund, when they are promoting the mutual funds, their sole concentration will be on income oriented or growth oriented schemes or balanced schemes. As per the market conditions, they will suggest, yes, these type of schemes HDFC consisting of. Suppose take an example in the recent conditions, market conditions that are presented, most of the mutual fund companies are suggesting to go for a long term investment in mid cap securities, that particular segment that was not gained the attention. So they are indicating their USPs in the market, floating their USPs for AMCs, asset management companies. In addition to the board of trustees and asset management companies, we have one more candidate is also available in the structure, namely custodian. Custodian is a fellow who considers or who takes care of the assets as well as the shares of the mutual fund company. In addition to these custodians who are presented in the market, we have transfer agents are also presented, TAs. They are the sole responsible for the transfer of securities. What are all the transactions that are happening. But what exactly the role of SEBI while monitoring this structure? Time to time, SEBI will interfere into the market conditions based on the role of intermediaries. Take an example, recently, SEBI intervened into the market conditions. They created a new area. Like as an investor, if I am well versed with the mutual funds, there is no need to approach to an intermediary. Directly I can enter, I can subscribe to the units, which you call it as direct subscriptions. So to differentiate those two things, NAVs announced by the companies are clearly indicating about direct investment avenues as well as intermediaries, through intermediaries. So that investors will have a great difference, because when as an investor, if I invested in the schemes directly, commission may not be paid to the intermediary. The amount of commission that was not paid will be reflected in my NAV. That's why the structure clearly SEBI was monitoring on a continuous basis about the mutual fund activity.
No, in spite of the close monitoring by the apex regulator as far as the capital market is concerned, of which mutual funds is a part, there have been a flood of complaints from investors saying that they have been losing money. And what do you think are the reasons, and what do you think are the considerations to be kept in mind while making a choice of investing in mutual funds?
largely what's happening in the mutual fund industry was about the mis-selling and cross-selling is happening. First of all, means while I am as an intermediary, when we are interacting with the investors closely, I should understand about the investors' objectives. What's exactly the objectives, keeping into which an investor is investing in the mutual funds. Maybe he may have an objective of construction of house in the long term, or child marriage, or he may go for a medical also. But largely what is happening, to promote the mutual funds, to promote their own schemes, wherever the intermediaries will get huge amount of commission.
Is it mis-selling or mismatching? Because
both are happening. Largely for mutual funds, it is mis-selling.
Yeah.
Is mis-selling that leads to mismatching of their objectives.
Because I have my own objective in designing or maybe creating a product.
That's exactly.
Right. I have a different thing.
Yes.
Now, a fellow who wants an apple, if he sold an orange and there is a mismatch, then actually
it may not match to his objectives.
So,
largely in the recent past, two industries catch this particular momentum. One is about insurance, where we have a lot of mis-selling and cross-selling is happening. Recently, it had happened with ULIPs that are floated in the market, unit-linked insurance plans promoted by the insurance companies.
Yeah.
Largely, even IRIDA also intervened into the system, and they made lot of suggestions. They gave lot of guidance as per the ULIPs also. And another industry that catch a lot of this attention is about mis-selling is happening in mutual fund industry. To control this type of trends, or whatever we are sharing about, the lot of investors are losing their hard-earned money by investing in the mutual funds. Recently, SEBI came out with a new changes in the mutual fund format. As an intermediaries, when we are suggesting a scheme, what SEBI will do is, in the scheme itself, scheme document, rather we can say the scheme document format consisting of AMFI ARN number as well as unique identification code, UID also I have to present. So that as an intermediary, if my UID is also presented on the scheme document, certainly tomorrow SEBI will know which intermediary suggested which scheme. Is it exactly suitable to the requirements of the investors? It's one way of tracking what intermediaries are doing.
It's more like making them more responsible.
More responsible in the market.
Something goes wrong with the money of the investor, right?
And at the same time, what SEBI at every point of time, whenever a mutual fund company is giving an advertisement, always they says subject to the market conditions, observe the market conditions, subject to the risk that is presented in the market. Okay. Means they are indicating about you have to observe few factors what are responsible for your schemes basically. One particular factor which as an investor I have to observe about the net asset value of a mutual fund. Every mutual fund company on a daily basis, they are supposed to release their net asset values. This in simple short form we call it as NAV. This is the value at which an investor can enter into the mutual fund, can exit. But coming to the topic of NAV as a sole criteria, for every mutual fund company, suppose take an example, when the NAVs of the mutual fund is increasing in an upward direction, certainly I have to observe whether this increase in NAV is due to inflows, fresh investors are adding to the scheme, or is it because of the assets what I am holding in the scheme are appreciating.
Oh, that's a very good
It may be of two things. Either if fresh investors adding to my schemes, certainly my NAV will increase, or if my assets whatever I am holding in the scheme, suppose take an example.
If they appreciate, naturally NAV goes up.
If my diversified equity schemes are appreciating in an upward direction, my NAV will increase.
Correct.
This is one positive trend, I can say one positive trend, but there is also one negative aspects also I have to observe when my NAVs are moving in an upward direction. Suppose take an example, when suddenly FII money is entering into the market or hot money is entering into the market, suddenly my NAVs also will float. That's a bad trend. As an investor, I should observe both the conditions, when NAVs are moving in an upward direction or when NAVs are moving in a downward direction. Maybe schemes, there are a lot of schemes are there in the market holding fundamental stocks. But to react that fundamental stocks in the portfolio, it will take a lot of time. I have to wait for that. I have to observe. So while selecting any mutual fund, first important issue is about the NAV. Second important factor I have to observe about the income that was generated by the mutual fund scheme. Income in the sense as a gross income percentage of your total net assets, or as a net income percentage of your total assets. Whether your gross or net incomes are moving in an upward direction, yes, it is an acceptable trend. What exactly an income for a mutual fund consisting of? It consisting of about the income generated through interest, or it consisting of income generated through earnings, maybe in the form of dividends.
Can there be a situation your NAV is going up but your gross earnings are coming down?
Possibilities are there. Suppose take an example, if my expenditure patterns are moving in an upward direction, to promote
No,
the
can
scheme.
this happen? Can this happen? I mean, something going up which is like
Possibilities are
NAV,
there. I'll tell you a situation also.
NAV going
Yes.
up and then gross earnings coming
Exactly,
down.
it had happened few
Now, if gross earnings are going up, but the net earnings as a percentage is coming down, what do you think is the factor? Is it because of the expenses?
majority of the role in the mutual funds, it was played by the expenditure patterns that are presented before floating of the scheme, after floating of the scheme.
Okay.
Before floating of the scheme, suppose take an example, if I put huge amount of expenditure, certainly I cannot justice to my investors. Even after floating of the scheme, if I am sanctioning huge amount of commissions.
What are the other factors, Sasi? Can be
like
quick?
other than net asset values or income of the mutual funds.
We have to probably run through the list
Yes.
of factors.
List of factors like net asset values or income generated by the mutual funds, or it may be selection of the scheme, or it may also consisting of portfolio, with what portfolio you are investing.
Can you quickly tell me what are the advantages of your mutual funds?
Like as mutual funds have gaining lot of momentum in the market, investors are also understanding about what type of advantages by investing in the mutual funds. One of the biggest advantage investors are receiving today in the market, they are receiving professional management at a cheaper cost, first of all. Other than professional management, tax benefits, they had greatest advantage of liquidity is also presented. Anytime they can sell the mutual funds, whether it is an open-ended or a closed-ended. If it is an open-ended mutual funds, I can redeem, I can go for redemption. That's why companies are announcing about sale value, repurchase values. If it is a closed-ended scheme, I can sell at the market rates, current market NAV that was presented in the market. Other than professional management or diversification patterns that are presented, liquidity, tax benefits, or even I can also consider about tax reliefs. What type of tax reliefs these funds are offering to the investors? So even
people also go for
I can
mutual funds
diversify.
because of the low transactional cost.
Low transactional cost happens when huge number of investors are presented in the market.
Fine.
Suppose schemes are there with old patterns, like schemes are there with 10 years, 11 years. Such places, huge number of investors are
One
presented.
final question
Low
for which I want
transaction
a
cost will
very
happen.
quick answer. Can you throw light on the recent developments in the mutual fund industry in the Indian context? What are the most important developments which you have witnessed during the last maybe 1 or 2 years?
When we observe the current trends that are happening in the market, especially in terms of numbers, in the year 2012, market witnessed and total assets under management nearly 6 trillions of assets under management, whereas in 2013 nearly we have 8 trillions of assets under management.
That's
We have nearly 12% jump was presented, and industry was also observed compound annual growth rate of 23% compound annual growth rate.
What does that mean to you?
It had happened about whenever we are observing the growth as a criteria, what matters to the investors or to the industry or to the other members who are interested about the industry is about CAGR. CAGR indicates about the
Compounded
annual growth rate. Or suppose take an example 2009-13.
We do often find in the mutual fund notifications or advertisements saying that some load factor, what is it? Front end
loads and entry loads and exit loads.
What is it?
Entry load and exit load indicates about while at the time of entering into the mutual funds, from the investors they will charge the entry load. But in the recent past, SEBI indicated about not to charge any entry loads from the investors.
Okay.
Only the exit loads are
Thank you
presented.
so much for your time, and then that was a great exposition about the different aspects and facets of mutual fund industry, the typology of mutual fund industry, and the schemes offered and the purposes for which you can subscribe to a particular fund, and the investment objectives and the recent happenings on the mutual funds front, and the advantages and the considerations to be kept in mind while making an investment into the mutual fund. Thank you, Dr. Sasi Kumar, for your time and expertise. Thank you.
Thank you.
మా కార్యక్రమాలపై మీ సూచనలు సలహాలు ఆహ్వానిస్తున్నాం. మీ సూచనలు సలహాలు మాకు తెలియచేయవలసిన చిరునామా: డైరెక్టర్, ఆడియో విజువల్ ప్రొడక్షన్ అండ్ రీసెర్చ్ సెంటర్, డాక్టర్ బిఆర్ అంబేద్కర్ ఓపెన్ యూనివర్సిటీ, ప్రొఫెసర్ జి రామరెడ్డి మార్గ్, రోడ్ నంబర్ 46, జూబ్లీ హిల్స్, హైదరాబాద్ 500033.